Hey guys, good evening everybody. Welcome to another edition of the accidenttrader.com nightly wrap show. So hope everybody's having a good day. So here's kind of my my day in a nutshell. So the one thing I really come across, and again, for all you guys who've been in the live webinar for the last 7 years, you kind of know this. Consistency for me is everything. I believe in the theory, and I say this all the time. Manufacture runs, right? We even said this a couple of days ago. Manufacture runs is a great baseball analogy that says get on base anywhere you can, right? You bunt, you can get on base. You can walk, you can get on base. You can, whatever. Get hit by a pitch, a solid. Get on base. The only way to score is to get on base. And after you get on base, do what you have to do to make sure you're consistently there. Again, baseball is a game of failure. Think about this. Baseball is a game of failure. Where else in life could you go be successful 3 out of 10 times and be considered a very, very good person at what they do? Anything you do 3 out of 10 times in life, especially in trading, you're going to be a very big failure. However, trading is a game of failure as well. The numbers and the statistics prove it, and they say that 90% of traders lose money. I believe it's a little exaggerated. I really do. I don't think that number is accurate. I think people start to believe it in the theory that is an accurate number. I don't believe so. I don't believe that so many people will try to get into an industry that has a 90% failure rate. So I do believe that number is a little bit skewed, but those numbers they're real. I mean, they are real. A game of failure is baseball, and a game of failure is definitely trading. But for those who figured it out, for those who have an edge, we have this kind of grind it out mentality that we believe if we could get those base hits and doubles, eventually we'll get our natural triples, we'll get our natural home runs. Again, perfect example. A guy like Derek Jeter, a huge Yankee fan, right? Guy like Derek Jeter, he's not going in the Hall of Fame for having 500, 600 home runs. He's going to the Hall of Fame of having tons of base hits, and 7, 8 times a year he'd hit the ball over the fence, and it'd be amazing, right? It'd be amazing. But he never went up to the plate trying to hit that home run. I will say this much, okay? I will say this much. I do have the Derek Jeter approach, okay? Hit the singles, hit the doubles. But once in a while, you will try to step up to the plate and hit a home run, okay? The problem is when you try to step up to the plate and hit a home run, that's the time you probably will not hit a home run, right? That's the probably time you'll make out, or you'll strike out, and you look very, very foolish at the plate. And that's exactly what happened to me today. And this is kind of an anatomy, okay? Kind of an anatomy of a trade that went poorly, okay? It was the right direction, the right outcome, poor execution. And let's talk about it right now. So as everybody knows, Netflix came out with earnings last night, right? They came out with earnings last night, some very positive numbers, especially overseas numbers. And stock had a pretty aggressive surge. I think it was like 8, 9%, up $11 pre-market. And then little by little, and again, guys, remember, for all you guys who are joining us for the first time, these are all 60-minute numbers, right? These are all 60-minute candles. These are not 1-minute candles. These are all 60-minute candles. And a 60-minute candle, for me, is everything. It's a whole story. It's a person. It's basically the beginning, the middle, and the end of a story. And every single one of these candles are a chapter to your final outcome, which is usually the end of the book. And every single one of these candles represents something. The more piece of the puzzle, the more in the data we get, the better information we can trade on. So you had this big exaggerated initial move, and then all these candles follow, right? So the bottom of this candle right here was last night's post-market low of 142.50. And as you can see, pre-market, right? Pre-market, that candle got broken, right? That candle got broken, and the stock went all the way down to 140, 143. Everybody see that, guys? This is the lowest candle, right? This is the lowest candle now on support. This line is support. It doesn't make a difference what line it is, what color. It is all support. So now this becomes the major pivot, right? This becomes the major pivot in the morning, and people ask me all the time, well, does pre-market and post-market count? Absolutely. Pre-market and post-market counts extremely. Again, guys, the more data we have, the more intelligent of a decision process we can make. So 141.33 was the pivot. It was a good pivot, as you can see. and the stock got massacred. Here's the problem, right? Here's the problem. Yesterday, right, people kept on asking me all the time, well, is there, do we have any edge on Netflix ahead of earnings? And the one thing that I kept on saying yesterday was, you know what, guys, let's leave Netflix alone. This is me talking about it yesterday, pre-earnings run. Let's leave Netflix alone. There's going to be a lot of volatility in the stock. There's going to be a lot of people in the stock. There's going to be the dip buyers for earnings. There's going to be the sellers for earnings. There's going to be a whole bunch of more quants, the robots. Everybody will be in the trade. So you know what, guys? Let's leave it alone. Okay, let's leave it alone. There is no advantage for us. So keep that in mind, right? Keep that in mind. So this morning during morning strategy, we talked about Netflix. And I said, hey guys, you know what? I want to watch this 141.33 level, but you know what? I don't want to trade it. I don't want to trade it through at 141.33. I want to see it build a base. I want to see it start building a base below this number. And if it starts cracking through the whole number, I will short it and the stock should go lower, right? That was our primary play. Remember, keep in mind, I said the day before the stock's going to be incredibly volatile. You shouldn't really go in with any meaningful size, and just be careful. Maybe stay out. It's a lot easier plays. Keep this all in mind. This is all what's going on here. So the stock eventually cracks this 141.33 area, right? It goes down to like 141, 141.15, 141.10, whatever the case may be. So I said to myself, you know what? I don't want to short it yet. Let me wait to see a little bit more selling pressure. I want to see those offers build that 141.33. As soon as I said that, right? As soon as I said that, brought up the stock right back to 142. And I said, all right, perfect. So whatever, guys, whatever the low is, and I think the low was like 141.10, whatever it was, 141.10. That's the pivot. If they start going through the whole number, guys, I'm going to short it. I'm going to short it. I'm going to short it. So they brought the stock to 142. And then they started, it got rejected, right? Gets rejected and starts coming down, coming down, coming down. So now I see the possibilities, right? I see the possibility. I see the next little line of support is right here. And if you believe in the theory of stocks go from supply to supply and support to support, the stock should make this first initial move to right over here, right? Which it did, right? Which is $2 low. So as soon as I see the sellers start lining up, 41.50, 41.40, 41.30, 41.20. For some reason, I got incredibly aggressive in the trade, more than I usually do, because I believe now this is the second time through the pivot. That is confirmation. And once it gets through the whole number, they should hit the stock, and the stock should ultimately wind up minimum this rising Bollinger Band here. And that's exactly what happened. Right, so I short the stock, right? I short the stock pretty aggressively, and the stock goes down, let's just say about 55 cents, right? 55 cents. If anybody's been trading Netflix for the last year, you know that Netflix has become a very concentrated, aggressive type of channel, a very aggressive type of vehicle. And what I mean by that is when the stock triggers on a pivot, and it kind of goes for the same thing with Facebook and Apple. When the stock pivots, usually that first move of like 30, 35, 40 cents is considered big, okay? It's considered big because there's so many, moving parts of all these quants and all these things. They usually hold some sort of fire, both on the long and the short side. So as soon as I put on the short, it went through the whole number. It got super aggressive very, very quickly. And it went down like, I would say 55 cents, right? 55 cents. I didn't even have time to even react, okay? Didn't even have time to react. You would have had to literally, been R2-D2, C3PO. You had to be a robot to see how fast that order flow was. On a normal tape and a normal orderly order flow, I would take a piece off just to lock in some cash flow, and then probably I would just put it back to break even, okay? And that was usually my trade. How I would get stopped out, and then I would look for another pivot below to re-enter the trade, because I always believe, again, for your efforts, you should get paid. And the most important part is, again, nobody ever takes back your money once you use break-even as your stop. So what happened was it started getting very, very aggressive, incredibly aggressive, right back at the whole number. Okay, right back at the whole number. And I kept on. One of the greatest things we have in the live webinar, you hear me, giving live commentary every single second of the trade. And I kept on saying is, and there's a big, big fight here. I don't like the way they're holding up the stock. I don't like the way they're holding up the stock at the whole number. It should have been coming in. And I kept on saying, I'm going to give it one more minute. I'm going to give it one more minute. I'm going to give it one more minute, because I know the longer the distribution takes place at the whole number, the better chance the sellers will tap out and they bring back the stock. So I kept on saying, one more minute, one more minute, one more minute. That last one more minute, right? That last one more minute that I said, they started ripping up the stock, right? So the stock started going out 40, 50 cents. But then again, it came back to the whole number. So again, I kept on saying, one more minute, one more minute, one more minute. They're going to crack it. They're going to crack it. So what they do is the last time this whole move, the last high for this whole move was about $1 higher. Okay, so I knew my max pain. I knew my max pain. I knew I had I was too aggressive with my size. Okay, I was too aggressive with my size. And I knew my max pain was $1. That dollar was going to hurt me. Okay, that dollar was going to hurt me. I know a lot of people don't trade for $1, $1.50, $2. It's not a big deal. I did pretty decent. I was in pretty decent size. And for me, I said to myself, the trade's going to work. Okay, it came in double time and double tested this original pivot twice. And now, if they could just reclaim that 41 level. Okay, if they could reclaim that 41 level, they're going to tank the stock again. Unfortunately, they brought up the stock back. I was down about 75, 80 cents in the trade. So I knew right there and then that was going to be my max pain. So they brought down the stock again. Okay, they brought down the stock again. And the third time they brought it back up, got stopped out, right? I got stopped out literally within 5, 10 cents of the range high. For whatever reason, it's like the market gods had it for me, okay? I stopped me out, and the stock literally in a beeline went straight down about 2.5 points. It sucked. It was terrible. It was a horrible feeling. I felt like, you know what, it just wasn't fair, right? Everybody has these feelings. You get into a trade, you say, oh, it's horrible. It's just not right. Again, it's the dark cloud. What was the point of stopping, going back up and only get rejected for the third time? Woe is me, woe is me, woe is me. And I never had those really big woe is me theories. It was like, wow, it really sucks. I really took a shot, right? I really took a shot at the trade. I really had a good risk analysis of the trade. I didn't think they were going to take it back up $1. I thought they were going to really base out, at that 41 level, and maybe, just maybe, if more time elapsed, the sloping supply was going to come in, and maybe my max pain would have been 50 cents, maybe 60 cents. But the problem was, and this is where the quants are your friends and then your quants are your enemies, they got me out. It's like a heat-seeking missile. These quants know where the stops are. The stops got triggered. They got me out, very aggressively. Took a big loss. Took a pretty decent loss. Took a pretty decent loss in the trade, and only watched the stock go down. Literally go. Didn't have even an uptick. It literally just didn't have an uptick. Just got absolutely massacred. And I kept on sitting there, and I said to myself, well, I understand what, the one thing I always, usually when I'm doing a trade and there's a pivot, I'm not shocked when it works. It's supposed to work. I found a very definitive edge, okay? And most of the time, you are going to get the one thing I do know about my pivots, the one thing that you're going to get, okay? The one thing that you're going to get is cash flow off that pivot. The first cash flow is 55, 60 cents. The problem is it came in a second. There was no way possible, unless I had a bid in there. As soon as I put on the trade, there was no way possible I would have got filled. So that part of the equation was working. My view of the trade was working. The problem, what I did was, I went in too aggressively, okay, on a day that I knew, that I'd worn the day before, that I knew was going to be filled with Ubers and Ubers of chunks of quants, the dip buyers, the aggressive sellers, the quant models, the hedge funds positioning, the hedge funds selling on the news, everybody. And yet I still did the trade with that much size. If I would have did my normal size, it would have sucked a little bit. It is what it is. I could have made it back very, pretty relatively quickly. But the problem was I avoided my own warning signs. I went in aggressively, and it bit me. It bit me pretty well. The most ironic part about it is, usually if I do a trade, I shoot myself in the foot. I'll be very down on myself, very angry at myself because I know better. This was a scenario I know better, but at the same time, I looked at all the data. I looked at it breaking the first pivot. I looked at it breaking the second pivot. And I said to myself, you know what? This is going to be the one time that I will try to go for the home run. I will try to go for the 5-run home run. And the problem is, as I mentioned earlier, when you try to hit a home run, you usually will strike out and you're going to look very, very poor doing so. And that's what happened. And again, that's what happened to me. But in a weird way, again, I've been on a run. I've been on a very, very good run, incredibly consistent, very in control. And that's the one thing I always talk about, being in control. And in a weird way, after you go on a good run, okay, on a good run, it's almost therapeutic. You know, every trader who trades risk, okay, especially, you know, stocks like this, every trader who trades risk, they're going to tell you, they know the end is coming. Nobody has this linear line when they're going to have a straight up, performance, and nobody else on the downside as well. You're not going to have a 12, 15 days losing in a row. There's somewhere in between is your natural ability to navigate the markets. And by the way, just the market doesn't usually do that. Just really doesn't do that to professional traders. The problem is, the day is coming. And I always, if all you guys have been listening to me for a while, I always say every trader has their buzzsaw day. Well, today was mine. Today was mine. And it's almost like, in a weird way, it's almost very kind of therapeutic. Okay. By no means am I happy about the loss. Oh, it's a learning experience. Every day is a learning experience. Every day, no matter what you do, win, lose, or draw, it's a learning experience. But the one thing that I do know, and I've known for years now, okay, you will get your buzzsaw. Okay. I don't care who you are. Murphy's Law will come and visit you. It always does. Whatever can go wrong will go wrong. Whatever you miss will be successful. I mean, every pivot, I think every other pivot that I put in the room today did very well. You know what? I didn't take it because I stopped myself out. That's the discipline. I stopped myself out because I believe that, whatever I was going to do for the rest of the day, and by the way, the rest of the day had zero value, except for the small cap names that people were pumping. There was very little value for the rest of the day. And you can, if those of you guys who've been trading, we were trading for a long time, you kind of see the same thing. So there wasn't really anything for me to make money back on. It was to the point that I know I did something wrong. Not technically. I know I did something wrong being too top tier heavy on a day that I shouldn't have been too top tier heavy, considering I knew what the ramifications were just 24 hours ago. So that was a good, unfortunate lesson learned. It's not a big deal. It is a big deal, but it's not a big deal because, again, just chop away, I'll make it back in several trades. But the most important part is, again, it's just something that we say all the time. No matter what the market can do to you, there's nothing the market can do to you that you can't do to yourself. And we are human beings. We laugh, we cry, we bleed. We're emotional wrecks. We're happy, we're sad. And you know what? We're going to F up, right? We're going to F up. And, you chalk it up to learning experience, whether you're trading for 17 minutes to 17 years, you will be victim of the buzzsaw. Very, very easy to get sucked in. It's very, very easy to go through emotional withdrawal. It's very, very easy to shut down mentally. But you know what? Life goes on. Trading goes on. Let this be a worst problem in the world. There's babies being born in third world countries with a limb missing, with diseases. Let this be the worst problem in life. We're very, very blessed. For all of us who've been doing this for a long time, we're very, very blessed to be sitting at home in our pajamas, whatever your fuzzy slippers, right? Fuzzy bunny slippers, and be able to click a mouse for a living. You will have a bad day. You will have a bad day, and nobody on social media would even know if I had a bad day. But anytime I have a bad day, and again, they don't come, knock on wood, too often, but anytime I have a bad day, I want to share my experiences because, again, there's a new trader out there, and the only thing they know is these low-flow garbages and people living this bikini model, nonsense lifestyle. When every other trader who's been doing the grunt work, putting in the hours, putting in the sweat, the blood, and the tears, they will tell you that the rationale of the stupidity what goes on social media is not trading. It's buying a stock and hoping another idiot comes up after you and takes you out of your trade out on a 5-cent move. When you're trading risk, guys, it's going to happen. It's not a big deal. It's the part of doing business that every single trader goes through. And you know what? This is not the first time. This is sure as hell not going to be the last time. As we talk about all the time, a professional trader has to be like Mariano Rivera, the greatest closer of all time, okay? You know, you come in, you'll blow a save, you'll look horrible, you'll give up 6 runs in inning in the third, and the next day you'll come in and you'll strike out the side, and you'll have short memory, and again, the train keeps on going to the next train stop. So I hope this thing kind of helped you guys, especially if you're new traders watching this for the very first time. You know, tomorrow's a new day. Tomorrow's Friday. I'm not in a rush. Overall, you know, it did take a good chunk of my week. Okay, you know, it did take a good chunk of my week. You know, pretty aggressively. But it is what it is. You know, it is what it is. And you know, life goes on, and my trading goes on. And tomorrow, hopefully, there'll be some value. Okay, hopefully will be some value. We'll talk about all the pivots and all the watch lists and all the good stuff tomorrow at Morning Strategy. I think this is just much more important for me to break down with you guys exactly what happened today, what was my thinking process, and how quickly and easily and necessary it is to kind of write it off, block it out, get a good night's sleep, and start over again. Again, guys, if you're a professional trader for 17 minutes or 17 years, your money is real, okay? Your money is real. The money you put on the table at every single trade is real. And I say this all the time, guys, if you don't bring your A+ game every single day, somebody on the other side of the trade will feed their kids with your hard-earned money. So, you know, again, we'll make mistakes. We're human. But again, short memory, life goes on. Tomorrow's a new day. The sun will rise. God bless everybody, and have a great night.